There is a benefit available right now to hundreds of thousands of pensioners across the United Kingdom. A benefit that could be worth thousands of pounds every single year. And the vast majority of the people who are entitled to it are not claiming it. Not because they have been turned down, not because they do not qualify, but simply because they do not know it exists, or they believe, incorrectly, that they would never be eligible. That benefit is called pension credit, and in today's video, I want to explain everything you need to know about it, what it is, how it works in 2026, who is eligible, and why so many pensioners are missing out on money that is rightfully theirs. The Department for Work and Pensions estimates that around 910,000 households who are entitled to pension credit are not claiming it. That figure represents billions of pounds sitting uncollected every year. The average amount a non-claimant is missing out on is roughly £2,500 annually, just from the pension credit payment itself. But here's the thing that surprises many people. That is only part of the story. Pension credit is what is known as a gateway benefit. That means claiming it does not just put money in your pocket directly, it also opens the door to a whole range of other financial support that you would not be able to access otherwise. When you add up everything pension credit can unlock, the direct payment, help with council tax, housing costs, energy bills, and more, the total value for some households can reach £4,000 a year or higher. So if you are a pensioner in the United Kingdom living on a modest income, or if you have a parent, relative, or neighbor in that situation, please stay with me for the next few minutes. This could genuinely make a significant difference. Pension credit is a means-tested benefit administered by the DWP, the Department for Work and Pensions. It is designed specifically for people who have reached state pension age and who are living on a low income. It is separate from your state pension. You can receive your state pension and still claim pension credit on top of it, provided your income falls below a certain level. There are actually two parts to pension credit, and it is worth understanding how they differ from one another. The first part is called guarantee credit. This is the more significant of the two. The way it works is straightforward. The government sets a minimum weekly income level for pensioners. If your income falls below that level, guarantee credit tops it up to that minimum. In the 2026 to 2027 tax year, that minimum level has been set at £238 per week for a single person and £363.25 per week for a couple. These figures rose by 4.8% in April 2026, in line with the earnings element of the triple lock that is also used to uprate the state pension. The second part is called savings credit. This is older and more complex. It was designed to reward pensioners who had made some savings or pension provision of their own during their working lives. However, there is a very important point here. Savings credit is only available to people who reached state pension age before the 6th of April 2016. If you reached state pension age after that date, savings credit does not apply to you. It is gradually being phased out as time goes on. The basic eligibility criteria for pension credit are fairly simple. You must be living in Great Britain, so England, Scotland, or Wales. You must have reached state pension age, which is currently 66, and your weekly income must fall below those threshold figures I mentioned. £238 for a single person, or £363.25 for a couple. Now, this is where confusion often begins. Many people assume that because they own their home or because they have some savings, they would automatically be disqualified. That is not the case. Pension credit is income-based, not wealth-based in the traditional sense. Having some savings does not automatically rule you out, though savings above £10,000 are generally treated as generating a notional income that is factored into the assessment. It is also worth knowing that if you have a disability, you may be entitled to additional amounts on top of the standard rate. If you have a severe disability, for example, there is an extra addition of £86 and 5 pence per week in 2026 to 2027 for a single person, and up to £172 and 10 pence per week where both members of a couple qualify. If you are a carer, there is also a carer addition of £48 and 15 pence per week. These additions can make a significant difference to the overall amount. Let me give you a few examples to bring this to life. Consider Margaret. She is 74 years old, lives alone, and receives the new state pension of around £221 per week. She has a small private pension that pays her an additional £12 per week, giving her a total weekly income of £233. The guarantee credit level for a single person is £238 per week. That means Margaret has a shortfall of £5 per week. Pension credit would top her income up to the full £238. Over a year, that is an additional £260 in her pocket. But more importantly, it also qualifies her for all of the gateway benefits we will come to shortly. Now consider Derek and Pat. They are a married couple, both in their late 60s. Between them, they receive state pension payments totaling £310 per week. They have no private pension income. The guarantee credit level for a couple is £363 and 25 pence per week. Their shortfall is over £53 per week. That means pension credit would provide them with an extra £53 per week, or around £2,760 over the course of a year, before any additional gateway benefits are taken into account. And there is another point many people miss. If either Margaret, Derek, or Pat also happened to have a condition that required help with personal care, they could potentially also claim attendance allowance on top of their pension credit. Attendance allowance is a separate disability benefit that does not affect your pension credit entitlement. The two can be claimed at the same time, making the combined financial support even more substantial. This is the section where I want you to pay particularly close attention, because this is where the real value of pension credit lies for many people. When you are successfully claiming pension credit, you become eligible for a whole range of other support. Here is what that can include. If you are aged 75 or over and you are in receipt of pension credit, you are entitled to a free television license. Given that the TV license currently costs £174 and 50 pence per year, this is a tangible and immediate saving. You may also become eligible for the winter fuel payment. This was previously a universal payment for all pensioners, but it became means-tested in the winter of 2024. From that point on, you generally need to be in receipt of pension credit or another qualifying benefit to receive it. The payment is worth £200 per household, or £300 if someone in your household is aged 80 or over. Being on pension credit is currently the primary route to receiving this payment for most low-income pensioners. Pension credit also opens the door to the Warm Home Discount, which is a reduction on your electricity bill. You may become eligible for help with your council tax through the Council Tax Reduction Scheme administered by your local council. If you rent your home, you may also become entitled to housing benefit at the maximum rate applicable in your area. There is also help available with NHS costs. Pension credit recipients may qualify for free NHS dental treatment, help towards the cost of glasses and contact lenses, and assistance with the cost of traveling to hospital appointments. When you add all of these potential benefits together, the total value of pension credit and its associated gateway support can easily reach £4,000 per year or more, depending on your individual circumstances. There is another point that many people miss when it comes to pension credit, and it is an important one. Even if you only qualify for a very small amount of pension credit, just £1 or £2 per week, you still gain access to all of those gateway benefits. It is not necessary to have a large entitlement. Simply being a pension credit recipient, even with a modest top-up, can unlock the full range of additional support. This is why the advice from organizations like Age UK and Citizens Advice is consistent. Always check your eligibility, even if you believe your income might be just above the threshold, because in many cases, people are surprised to find they do qualify. There is also the matter of backdating. When you make a successful claim for pension credit, the DWP can backdate your payment by up to 3 months. That means if you have been eligible for some time but have not yet applied, you could potentially receive a lump sum covering the previous 3 months of entitlement. The sooner you apply, the sooner that 3-month backdating window begins. So, what should you do if you think you or someone you know might be eligible? The first step is to use the Pension Credit Calculator on the gov.uk website. This is a free, straightforward tool that gives you an estimate of whether you might be entitled and roughly how much you could receive. It is not a formal assessment, but it gives you a very useful starting point. You can find it by searching Pension Credit Calculator on gov.uk. If the calculator suggests you may be eligible, the next step is to make an actual claim. You can do this in one of 3 ways. You can apply online at gov.uk. The online form has been redesigned and the DWP says it now takes an average of around 16 minutes to complete. You can apply by post by writing to the Pension Service. Or you can apply by phone by calling the Pension Credit Claim Line, which is 0800991234. That number is free to call from most landlines and mobile phones. When you apply, you will need to have certain information to hand. This includes your national insurance number, details of your income including your state pension and any private pensions, details of any savings or investments you hold, and your bank account details. If you live with a partner, you will need their information as well. If you have watched this video and found yourself thinking that pension credit might apply to you, I would encourage you to take that next step and check. It costs nothing to find out whether you are eligible, and the potential benefit, both from the direct payment and from the gateway benefits it unlocks, is considerable. If you are not comfortable using the internet, or if you would like someone to help you work through the figures, there are organizations that can provide free and impartial assistance. Age UK runs an advice line and can help you understand your entitlements. Citizens Advice also offers free guidance on benefits and can help you navigate the claims process. It is also worth checking on elderly relatives, friends, or neighbors who may be living on a low income. Many older people are not aware of pension credit or feel reluctant to claim benefits even when they are entitled to them. The money is there, and it is there specifically for people in this situation. As always, rules and amounts can change over time, and what applies to one person's situation may differ from another. If you have complex circumstances, such as living abroad for part of the year, having a partner below state pension age, or having income from certain types of investments, it is worth seeking specific advice from a benefit specialist or financial advisor. Let me bring everything together. Pension credit is a means-tested benefit from the DWP for pensioners aged 66 and over who are living on a low income. In 2026 to 2027, the guarantee credit level is £238 per week for a single person and £363.25 per week for a couple. If your income falls below those levels, pension credit tops it up to that minimum. There are additional amounts available for people with severe disabilities or caring responsibilities. Savings credit still exists, but is only available to those who reached GEOEA RL21. Claiming pension credit also unlocks a range of gateway benefits, including the winter fuel payment, a free television license for over 75s, the warm home discount, council tax reduction, housing benefit, and help with NHS costs. Claims can be backdated by up to 3 months. Around 910,000 eligible households are not claiming pension credit. If there is any chance you or someone you know might be one of them, please take a few minutes to check. If you found this video helpful, I hope you will consider subscribing to this channel. We cover the state pension, DWP benefits, retirement income, savings, and all the financial matters that affect pensioners in the United Kingdom. New videos are published regularly, and everyone is designed to give you clear, straightforward information so that you can make the most of what you are entitled to. Thank you very much for watching, and I will see you in the next one.